From the AC in your bedroom and the fridge in your kitchen to the TV in your living room, LG products are hardly alien to Indian households. After all, LG Electronics India is a major manufacturer and distributor of all sorts of home appliances and consumer electronics. And the company also offers installation, repairs, and maintenance services for its products. Its product range includes refrigerators, washing machines, microwaves, ACs, TVs, dishwashers, audio systems, and a lot more. And now, LG Electronics India, which is the subsidiary of the South Korean company LG Electronics, is set to roll out 11,607 rupees crore IPO on the 7th October 2025. The price band for the IPO has been set at 1,080 rupees to 1,140 rupees per share, with the lot size set at 13 shares per lot. But this IPO is entirely an OFS or an offer for sale, so no new shares are issued by the company. And aside from the IPO-related expenses, the IPO proceeds would go to the existing shareholders looking to sell their stake. Now, before we move to the company background and history, let's take a detour to examine the business rationale, the elements that investors consider important when evaluating the company, brought to you by the ICICI Direct Research Desk. When we look at LG India, a few things stand out clearly. First, it isn't just about having market leadership, it's the breadth of that leadership. From affordable categories like semi-automatic washing machines and direct-cooled refrigerators to the premium end with OLED TVs and side-by-side refrigerators, LG is present across the spectrum. This wide positioning means it caters to both volume-driven demand and aspirational consumption trends. Second, its connection with the parent company adds another layer of strength. Through the LG Electronics ecosystem, LG India gets access to world-class product innovation, technical know-how, and operational insights. That global ecosystem translates into quicker product launches and constant upgrades tailored for the Indian market at a royalty of just 1.8 to 1.9% of sales in total to the parent company. Then, consider the company's reach. With over 35,000 retail touchpoints and 97 sales offices spread across semi-urban and rural areas, its distribution network is expansive. Combine that with an after-sales service network of over 1,000 authorized service centers. Then comes manufacturing. LG India doesn't just assemble, it manufactures key components like compressors and motors in-house, giving it tighter control over cost, quality, and timelines. And now, with a new Rs 5,000 crore investment into third plant in Andhra Pradesh, the company is positioning India as a global manufacturing hub for global markets. And finally, all of this reflects in its numbers. In FY25, LG Electronics India reported industry-leading profitability with EBITDA margins of nearly 13%. The company's return ratios, be it its ROCE at roughly 43% and ROE at around 37%, only drive home the point. All in all, strong capital efficiency and a short working capital cycle underline its ability to scale sustainably. And now, let us move on to the company background and history. LG Electronics India Limited was incorporated in 1997 as a private limited company, remaining a wholly owned subsidiary of LG Electronics, South Korea, one of the world's biggest consumer electronics companies. Over the last 2.5 decades, LG India has established itself as one of the country's leading players in the consumer durables industry. Earlier, the company simply imported and assembled select products that it then sold in the Indian market. But over time, they moved on to full-scale manufacturing in India. Today, the company has two key manufacturing facilities in India, one in Noida and the other in Pune. These plants manufacture a wide range of products locally, demonstrating LG India's long-term commitment to Make in India. Also, the company's after-sales infrastructure has grown alongside the business and is a vital part of its brand promise. But no business exists in a vacuum. Let's check out the industry and the market context for a bit. The consumer electronics sector in India has been growing consistently. In fact, India is one of the fastest growing markets globally for home appliances and consumer electronics. Being a developing country, India has a large headroom for further penetration compared to developed countries. Factors leading to this growth in the sectors include rising disposable incomes, urbanization and nuclear family trends, increased electrification and penetration of appliances in rural and semi-urban areas, aspirational consumption with consumers moving to premium products. And that's not all. The RHP notes that categories such as like refrigerators, washing machines, televisions, and air conditioners are still underpenetrated in India when benchmarked internationally. This creates significant long-term growth potential. Industry growth is also expected to be shaped by trends such as energy-efficient appliances, smart devices, and consumers' increasing preferences for branded, reliable products with strong after-sales support. So, the sector does promise growth in the years to come. You may have seen LG products everywhere, but here are some key business trends you should know about. For starters, it has a leading market share in home appliances and consumer electronics in India. The company's market leadership extends to key categories such as washing machines, refrigerators, panel TVs, inverter ACs, and microwaves. Moving on, the company also states its history of developing new and the innovative products for Indian consumers, including many industry-first technologies. Another key strength would be its large pan-India distribution and after-sales network. In fact, the company operates the largest distribution network among leading home appliance and consumer electronics players. The company also states its capital efficiency as a key competitive strength. For instance, its return on capital employed or ROCE stood at over 45% in FY24. And lastly, the company has strong manufacturing capabilities and a localized supply chain. But what about the company's profitability? Is the company's revenue increasing, and is that reflecting in the company's bottom line? Let's take a look at the financials. As you can see in the chart, the company's revenue from operations has steadily grown in both FY24 and FY25. And as for the profit after tax, after solid growth in FY24, we can see a sharp uptick in FY25. All this may seem very promising, but for a balanced view, let's check out the specific risk applicable to investing in this particular IPO. As you know, LG Electronics India is a subsidiary of LG Electronics. From product innovation and design to technical know-how, LG supports LG India in multiple ways as a part of their license agreement. Any adverse change in LG India's relationship with its parent company could adversely impact its business operations. Then there's the risk that LG India's promoter and parent company, LG Electronics, could engage in the same line of activity or business as that of LG India. After all, the two companies don't have an exclusivity arrangement. Thirdly, the company needs a wide range of raw materials for its business operations. Any increase in the price of these raw materials could adversely impact business operations. And speaking of raw materials, the company relies on select suppliers for key raw materials. In fact, the company's top 10 suppliers of raw materials made up over 31% of its total purchases in the first quarter of FY24. Any interruption in raw material supply could negatively impact the business. Please consult your financial advisor and refer to the official prospectus before making any decisions. So, what's your take on the LG IPO? Share your thoughts in the comment section and let us know. And for updates on more IPOs, watch this space. Happy investing.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.